Hi there. In this video, we explain the Non-Resident Landlord Scheme and how withholding tax applies to UK rental income in 2026.
If your landlord lives overseas, you may be legally required to intercept 20% of your rent and send it directly to HMRC. HMRC can transfer your overseas landlord's unpaid tax bill, plus hefty fines, directly onto your shoulders if you miss this legal requirement. I'm working with Pro Tax Accountant, or PTA, to help you navigate this. We guide businesses and individuals through the mechanics of UK property tax to ensure you remain compliant. Right now, two major systems are converging. The long-standing non-resident landlord scheme is about to collide with the mandatory Making Tax Digital rollout in April 2026. This shift creates immediate obligations for British expats renting out homes, overseas corporate investors, and the UK-based tenants. We're going to map out the current rules, identify exactly who is affected, detail the mandatory compliance steps for 2026, and show you the mistakes to avoid. Managing UK property from abroad requires constant administrative oversight. For all parties involved, it is an active legal responsibility with specific financial risks. The system hinges on the usual place of abode rule. If a landlord spends more than 6 months of the tax year outside the UK, HMRC treats them as a non-resident landlord. This status triggers an automatic 20% withholding tax on the gross rental income. For the landlord, this creates a cash flow trade-off. HMRC takes that 20% before any property expenses, maintenance costs, or mortgage payments are settled. This reaches the tenant if you pay more than £100 a week directly into an overseas landlord's bank account without using a UK letting agent. In this scenario, you must register with HMRC, deduct the 20%, and file quarterly returns yourself. A typical rent payment is divided. 80% goes to the landlord, while 20% moves directly to the government building icon. This protects the tenant from tax penalties, but creates an administrative burden and friction in the landlord-tenant relationship. Without a UK letting agent acting as a shield, the NRLS turns ordinary renters into tax collectors for the government. While tenants deal with the withholding rules, overseas landlords are facing a digital compliance mandate arriving in April 2026. The government is making tax digital, or MTD, the mandatory replacement for traditional self-assessment tax returns. Landlords generating over £50,000 in gross qualifying income will be enrolled in this first wave. Comparing the systems, instead of filing a single annual document, you will provide 4 digital updates to HMRC every year. This frequency requires specialized software, but the government intends this real-time visibility to reduce end-of-year tax errors. MTD forces overseas landlords to update their accounting practices or face immediate, compounding penalties for missing their digital deadlines. Landlords can reclaim their full cash flow by applying for gross payment status, which removes the automatic 20% withholding. You apply by submitting an NRL-1 form for individuals or an NRL-2 form for corporate entities. If approved, your letting agents and tenants receive HMRC authorization to pay 100% of the rent directly to you. However, HMRC will revoke this status if you miss your MTD updates or self-assessment filings. Beyond the paperwork, you must also prepare for the property tax rate increases scheduled for April 2027. This bar chart shows the upcoming surcharge tax brackets for individual landlords. In 2027, rates hit 22%, 42%, and 47%. These contrast with stable corporate tax rates, which sit lower, between 19% and 25%. While gross payment status fixes immediate cash flow, surviving the 2027 rate hikes often requires evaluating a move to a corporate structure. HMRC is shifting overseas landlords toward real-time reporting and away from the traditional January filing cycle. For tenants, check if your weekly rent exceeds £100. If you pay an overseas landlord directly, you must register and begin withholding tax. For individual landlords with high rental income, you need MTD compliant software and should apply for gross payment status immediately. For corporate landlords, file the NRL-2 form to manage your corporation tax without upfront withholding. Use this checklist for your final review. Verify your abode status, submit your NRL form, adopt MTD software, and consult an expert. This is educational content. Tax laws are subject to change, and this does not constitute formal financial advice. Pro Tax Accountant is available to help you navigate these digital and regulatory requirements. You can reach PTA at 07985 689 912 or via email at info@protaxaccountant.co.uk. Be sure to subscribe to the channel for more updates. Proactive compliance is the only way to protect your UK property profits as HMRC shifts toward mandatory digital reporting.